All right, I believe we are live. Happy Tuesday, everybody. July 8th, 2025. Hope you guys are all having a phenomenal evening thus far. Mr. Patel, how are things going for you, brother? It's been almost a week since I've seen you.
It's good, man. Just let me just change my camera to the other direction. So, boom. Okay. It's been good, man. Just, just catching up on sleep, catching up on some work related stuff that I had to take care of for prior to going to Mexico. And
Mhm.
yeah, no, overall it's been a pretty good week. I feel like my camera's lagging for some reason. I don't know.
I thought so too, but I think it's good enough. It's not horrible.
Yeah.
Uh,
Yeah.
Not horrible. Uh Man, I'm just gonna say, between Cancun, meeting up with a subscriber, some of the notes that I've gotten today, with Rocket
Hmm.
Lab being at all-time highs, it's really touched my soul, brother. Like, I don't know, I know you get a lot of messages as well, but I'm just ecstatic that people are doing well in the markets. And with that, I hope that people recognize it's always a pendulum swing to an extent, right? There's always going to
Hmm.
be highs and lows, but my hope is that there's always more higher highs than people's, lower lows. I
Yeah.
never hope people have lower lows, but my hope is that, within a little bit of
Okay.
distance, 10 or 15% or so, you guys are sitting there being like, you know what, we're moving things in the right direction, and that's the hope that we have. And it's just been really really fun for me to kind of hear from folks over the past few weeks. I try to just keep my head down and get after it and do well. And just the response that we got has been a lot of fun, and it was great to kind of reflect and hang out with you in Mexico, chat a little bit about how things have been going, and same thing with hanging out with Tevis. And one of the things I recognized as well, and I'm sure we'll talk a little bit about it, have a conversation, is I need to start taking things more seriously. I've been grinding a good amount. I'm 34, but I look like I'm 40, and I feel older by the day. And so with that, I know I need to take a little bit more care of myself and stop focusing so much on the money side of things. And so that's my motivation over the next couple months, is to really start to get that in focus. And things are already underway in that respect. And, having good chats with you and Tevis and Cancun really helped me kind of realize. I've told people this, I think, before, but I think it's important for me to be kind of honest and transparent. Is I've been talking over the past few weeks, and I think people that have been watching my lives have probably heard me say I'm a little bit frustrated and in some sort of plateau with my life and trying to understand what the next step is, whether it's a new business, do I do more stocks, do I do more real estate, do I do whatever. And in reality, I think it's more of like my mental and physical health that need a little bit more love and care. So after having that, kind of time to get away with you and Tevis, it made me realize that I need to take my foot off the accelerator a little bit, and with that, enjoy a little bit of the rewards that I've been able to reap over the past, what, 10, 12 years since I've entered the workforce. And even before then, late nights, 2, 3 a.m., at university, trying to make sure that I graduate in 4 years, getting my engineering degree and everything like that. So it's just been a blast. The notes that we've gotten from people are absolutely phenomenal. But always remember, with market highs come market lows too, right? So with that, always be sure you're adjusting. We've had a great conversation about that in Cancun as well. But I want to hand it over to you, man. It's good to see you, and just wanted to get that off my chest before we dive deep into today's episode.
Yeah, it's kind of the same thing with me also. Like going to Mexico, it was fun to just get away and actually talk to people in real life. Like talking to Zach was great, talking to
Mhm.
you, Tevis, all the things that came around, basically around Mexico. It really makes you appreciate just hanging out with the boys, as opposed to just always doing live streams and talking about stocks. And I mean, we still spoke about stocks when we were in Mexico, but at the same time, it was also like it was just good meeting people, going to restaurants. And I think post COVID, as a society, I think we've lost a little bit of that. Like I remember post COVID, like pre-COVID, I was a lot more active, going out more. But then again, I was a younger guy too, so it's not like,
Hmm.
it's a thing. But so I think I want to get back to that again, right? So I want to actually go out, talk to people, meet people again, and like develop long-term friendships that are just not based on just YouTube and Twitter and everything else, but actually like get to meet people, especially share in success. The one thing I realized is it's one thing to be successful, but if you have no one to share your success with and enjoy that camaraderie that comes with winning, then like what's the point really? It's like,
Hmm.
oh, look, I got a seven-figure portfolio. It's like, okay, and like what is that what gets you happy every morning when you wake up and
Hmm.
just like, look, I'm good? Like some people that's enough. For me, it's like, yeah, I want to actually go and enjoy my life now, and
Hmm.
I think that's one of the keys to investing is that if you don't enjoy it and you're always chasing after more and more money, eventually you're going to completely miss out on life. And then you're going to die, and the six-figure portfolio or seven-figure portfolios is going to go to, your loved ones, which is nice. But at the same time, I'm sure if you asked anyone, they'd say, like, I wish he had just enjoyed his life more. So I'll tell you a story. My grandfather, he was not rich at all. He was actually very poor. And he worked his entire life to save money so that when he died, he could give my dad something to say, look, I gave my son this thing. And the thing is, like, because he was trying to save that money, he didn't go and do other things in life and just got to see the world. I mean, he comes from a different generation too, where if you go like 1,000 kilometers in any direction, you've traveled further than anyone that he's known. So it wasn't like, a big thing, but at the same time, so he saved all this money. And so when he passed away, like he left it to my dad. And it's funny because I think it was like $20,000. And my dad's like, my regret is not that he gave me $20,000. My regret is that he didn't use that 20,000 to go see the world and to
Mm.
enjoy life, you know, especially in your later years, bro. The last 10 years of your life, they suck. Like
Mm.
I have a grand uncle right now. He's got like Alzheimer's,
Mm.
and like he doesn't know where he is half the time, and he's also got like some other health issues, so he's not long for this world. And the thing is, like, yeah, I mean, he's still existing, but the last 10, 15 years are basically just people looking around and saying like, oh, what did this guy accomplish? What did he do? And after that, it's meaningless, right? So my thing is, while I'm young, I still have the ability. My wife is young. I want to go and enjoy the world. Go to different parts of the world and get to see things. And investing is definitely still going to be on the radar, of course. But I think it's time to take a step back from just work, 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 and actually put some time and enjoy, you know?
Yeah. And every time I've realized, like, and every time I've done little things like that, where I've taken some time for myself, had my own personal, like, alone vacations, uh, every time I've done that, my my mind and perspective have kind of opened up to allow me to think about what the next things I need to do really are. And so it's really those trips that have allowed me to do that. And I feel like it's every time I take a trip, I'm like, okay, I'm ready for the next step. I'm ready.
Mhm.
It's like little check-in points. You and I talked about that a little bit earlier. It's like allowing yourself to have those check-ins with yourself instead of just, being in your normal 9 to 5, Monday through Friday grind, doing the same thing every week in and out. It allows you to kind of break that mold and allows you to really think about what am I doing, how am I doing it. And I think a lot of times for me, I created this YouTube channel and a lot of what I'm doing with the objective of freedom in mind. And yet at the same time, it's like now that I've gotten to a place where I can recognize that freedom, I want to put myself in a box and say, not yet, not enough. Right. And it's like,
Yeah.
well, that it's counterintuitive as to why I started the objective of the portfolio in the first place. That's not to say I'm going to give up. Right. It was never like hey, get to your number and kind of give up sort of thing. And the number has moved, and it continues to move all the time. But at the same time, it's like you've gotten to a place where you can be free or be somewhat free. Like, stop stop and smell the roses a little bit. Always think about the objective, right? And sometimes you lose track of it. And same thing with the market. Sometimes the market makes you go crazy. You and I talk about having to feel like we need to continue to find new things to invest in because of the fact that, hey, like we have these 4 or 5 different things in the portfolio. They've done well. What's the next thing? And it's like, well, sometimes the next thing is something you already have in your bag, or sometimes it's okay to wait,
Yeah.
Anyway.
Yeah, and that's the struggle with like being an investor that actually does investing and also creates content. I think that's the major difference. Like there are people who are content creators that invest, and then there's investors that create content. And I know it sounds one and the same, but there's one type of person that puts an investing hat on, the other one puts a hat on that's more content creation, right? So they
Mhm.
make things a little bit more, focus on that. And I think both of us are more investors first than content creators, where we try to basically look at all the stuff and we don't chase, like one of the things we don't do is we don't chase hype, right? Whenever we see hype things, we don't chase it. We craft theses around a company. We use valuations. We use sentiment sometimes because sentiment can also help. And we base our investing decisions based on that. Sometimes it's worked out in our favor to a great degree, and sometimes it hasn't worked out. So, but I think overall, our portfolio performance speaks volumes as to, I think what we're doing is right. And what we need to do is just reinforce those fundamentals on our continued investing strategy. Right. So I think season 2, we can kind of like go over the performance for this year and basically just take a break. We're not going to talk about new stocks. We're not looking at, like, I'm still always going to be looking for new stocks, but I'm just like doing it from an observational point and a learning standpoint rather than, hey, I'm looking at this as a investment for the next couple of years and see where things go. The only stock I'd say I'm focusing on a lot more due diligence on is probably just United Health, because I think there's a lot of value there. But other than that, I'm just letting the markets do its thing.
Yeah. Yeah, so the people that aren't catching on here, Finn, Fin, that's the title of the podcast for particular. So it's been a while since Chris and I have actually taken a extended leave. Maybe not so much, I don't know, but we've done approximately 125, 127 episodes in total. Not sure how many episodes this season has particularly been, but we have yet to kind of take some time to actually, reflect, not necessarily have to be on the go. And it's not to say that we won't be appearing on other podcasts or anything like that, but this is just one that we work collectively on together, and we recognize that it's an opportunity for us to put a pause. We've done some really good work. We've been able to help a lot of people. And at the same time, the markets are doing rather well. So I don't want to say we're taking a victory lap or anything like that. But at the same time, it's like, I think a lot of folks are always being like, what's the next stock? What's the next stock? What's the next stock? And to be honest, sometimes there isn't one, or just because there's other opportunities out there doesn't mean you have to swing, right? Warren Buffett has a really famous quote of, if you can only make 10 investment choices and your entire investment career is based off those 10 investment choices, you'd likely do better than if you were to just have a normal investing career, because you'd honestly sit and think and take the big swings when it really matters. You honestly find something, you do your due diligence. I think a lot more people need to take that sort of approach and mentality of, it's not about quantity, it's about quality to an extent. And you'll get some wrong, you'll get some right. Trust me, I've gotten plenty wrong, and I probably have lost, in terms of opportunity cost and actual money, hundreds of thousands of dollars in not being able to succeed, or investing in the wrong companies when I should have invested in why. But at the end of the day, it's about making sure that you have some sort of rigor behind everything that you do. And I unfortunately see so many people sprinkling money across so many opportunities just because they heard it at the water cooler at work. And most of them end up in flames, so.
I feel like you're going to talk about the Bitcoin treasuries, because that's the one that like I'm looking at right now. Bitcoin treasuries. Now there's Ethereum treasuries. So I'm like, okay, this is interesting, you know, and maybe they'll be able to craft a business around it. But I've never come across a situation where the underlying securities volatility can basically result in people making money, but at the same time, like now you also have so many people jumping into the yield maxes. Like I don't know if you've seen that. Like now I'm looking at Twitter and everyone's like talking about Misty, and I'm just like, oh God, here we go, you know. So
Mhm.
it is what it is. That's just what it is. You
And I
know.
wish everybody the best, right? I don't want to down or shit on anything that anybody's investing in. I would just be cautious. Make sure you read the prospectuses of
Yeah.
what you're investing in. Is that even a word? Prospectus at a minimum
Yeah.
for everything that you're investing in, and understand, you know, capital preservation in some of these things isn't necessarily the goal. So um,
I think the
anyway,
part that I'm always like when I see the yield max things come up, I see people desperate for income to replace work income. And so they're like, oh, if I could just take $100,000 and get these hundred and something thousand per like 100% return from Misty, that means that now I have like this theoretical income that's going to be coming in every month and I don't have to work anymore. And I guess that is true to a certain degree, but then you also have to look at like NAV erosion as well. And so those are the kinds of things that I think mislead people. Uh, and the thing is, like, this is while the underlying asset that this thing uses to create the value is in a bull, is in a bull market. So the challenge here is how do you contend with that if you go into a bear market or
yeah,
even a sideways market? Because if you're in a sideways market, what happens is the volatility goes down significantly. So your total yield actually starts to compress, which I think a lot of people don't necessarily look at that. So they're like, oh, 140% return using this yield max strategy, which is like, okay, like that's insane. But then you look at like you do the total return and then you think about how the taxes on it work. There's a lot more things that people should understand about it before they really take the plunge into it. And I think you being a dividend guy before, you understand this sort of well too. So, I'm not saying don't invest in Misty, don't invest in yield max stocks. By all means, if you think that, hey, these are good investments in your portfolio and you understand the risks, you understand the consequences from a tax perspective, and if it works for you, by all means, go right ahead. Don't let me stop you, you know.
no, I agree. I mean, I personally am not going to follow people into that. And I've seen that. I see a lot of people being like, okay, I can take out 12%, 15% per annum and still do okay. And I think a lot of that lies in the fact that we had a really good 2023. We've had a really good
Mhm.
2024. We've had an okay 2025. And we'll get into that in just a moment with respect to like our performance comparatively to the SPY, year to date and over the past 12 months. But
Yeah.
there are years that are going to show up like 2022 where you just know the
Yeah.
low is in, know the low is in, know the low is in, and you wait an entire year for it to bottom out, 9 months of it continuing to go down. And that's not even that bad.
Yeah.
There's been years where it's been cycles where it's been 2-3 years, if not even more, where it's either gone down or been flat, sometimes decade or more, where it's been completely flat.
Yeah.
And so in that respect, you can't rely on the fact that your 10-15% annual sort of returns are always going to be there to bail you out. And so thinking that you can have a $300,000 portfolio and be able to pull out 100 grand a year because you invested in a Palantir or Rocket Lab, and you think it's going to continue to persist. Maybe you'll luck out, but generally speaking, history does repeat itself to an extent and shows you that in what's the word I'm looking for? Back calculations of the majority and the average portfolios, it's not going to work out for you. You might be one of the few, but same thing with anything yielding north of like 6%. Generally speaking, it doesn't
Hmm.
work out well in the long term. Generally, there's going to be the exception. And you
Yeah.
can think that whatever you're investing in is the exception. But I always try to tell people, and we had a really good conversation yesterday in the Matt Money WhatsApp group, and it was like, Um, 3 to 4% is what this individual, from a principal perspective, is planning on pulling out. And then they were thinking about doing small covered calls, super far out of the money, hitting singles just for some additional weekly income. And I was like, if you're setting yourself up for pulling out 3 to 4% per annum and writing some small, super far out of the money covered calls, you will do phenomenally if you can set up your expenses, etc., to match that. And so, that's just typical average sort of stuff. I mean, you're not talking about, and if you're really sophisticated, maybe you can lean up on 6% withdrawal rates, but I don't recommend it. There's always going to be a year or an outlier where you really need that money to stay in the market, and here you are pulling it out at the most inopportune time. So anyway, we're kind of diving deeper into like long-term investment sort of thought processes, but anyway, I just see people saying, this is a trap that I saw a lot of people in 2021 get into as well. The markets will go up in 30% annually in perpetuity, right? And I'm like, that's not going to happen.
Yeah, good luck with that. You ever heard the term, and I think we always forget it. If it's too good to be true, it probably is.
Mm-hmm. You mean 100% yield for MSTY isn't too good to be true?
Hey, listen, maybe they crack the code on the market. Screw index funds, get into what is it? Leveraged option selling, return capital. I don't know. Maybe, like I said, yield max, maybe they figured it out. But as far as I can tell, you look at the overall performance, it's completely goes the other way. Like you look at Tesla, right? Tesla stock versus TSLY, and it's like, whew, So right now, the flavor of the day is Misty. So we'll see what happens with that. So like I said, I'm not bearish on it. I'm not bullish on it because there's no fundamentals, right? You can't even make a judgment and say, oh, I think this is fundamentally strong. I think this is fundamentally weak. Like you can't. Why? Because all it really is, it's a covered call strategy on an underlying asset. And you can't value the underlying asset, so you can't analyze this as a business. And so if you can't analyze this business, you don't know what the total return profile is going to look like. So,
let's take a quick look at the performance before we close it out for a little bit. Any guesses? I think I already told you about it over the phone.
So we did well. We beat the market. That's what matters. And we beat the market by a good measure too, which is always the impressive part about the total returns that we have. So
I got called a shill yesterday because apparently I'm a liar, and I don't know. Some guy was calling me out. I thought it was super funny. It was really funny. He was like, "You need to apologize." I was like, "Who are you? I don't even know who you are." But anyway, different story for a different day. So as you can see on the left-hand side, year-to-date performance, we're up 31%. The average S&P over the past year-to-date, not past year-to-date, the year-to-date, just under 7%. This is as of yesterday, though, so keep in mind this is a day behind. And then the trailing 12 months year is on the right-hand side, so we're up about 65% over the past year. Lofted by great investments in ASTS, Rocket Lab, a few other things. We'll get into the portfolio in just a moment. With what we've done, and maybe in the background I can pull up some of the other winners that we've had maybe in 2024, 2025 that I might have forgotten. But that's beating the S&P by 3-4x, 13%, 13.5% over the past trailing 12 months for the S&P.
Our goal was to beat it by 3x, right? But we're beating it by almost not 6x, probably like 5x, which is good for now. That means that if the S&P rises and we have a couple of bad years, we could just kind of sail away on our neutral portfolio for a while on our as I look at our return compared to S&P over the last 5 years. We're still outperforming. And if you look at a lot of hedge funds, that's exactly what they rely on. Right. So they have this 1 year where they have tremendous returns. And then for the next 5 years, they underperform. And it's like, well, look at my 5-year average. It's really freaking good. So, yeah.
So let me just look at, you can hear me, right? Okay. So let's take a look. Actually, before we get into some of our other winners, I wanted to make a slide, but I can maybe just call it out. So running the portfolio just under 11,000 for the invested capital for these tax lots. We're up 30%, and I'll read off some of the other winners that we've had in the background and some of the losers as well. But wow, didn't realize that Venture Global was up. Oh, because we sold some of our higher cost basis shares. Okay, that makes sense. I was like, what the hell? Same thing happened for me. I don't know if I told you this. I sold a couple hundred shares of Venture Global, basically the stuff I had bought during IPO, and I put that into NEXT. So fingers crossed that NEXT. We'll talk about NEXT in a minute too, because I'm just looking up some of the wins that we've had over the past year and some of the sales we've taken, because we did the same thing that we did with Venture Global. We did with Next at some point. So we'll get into that in just a moment. But this is ranked in terms of the total current value all the way to the smallest. We do have some covered calls on. That's what this negative 120 is for Venture Global at the $20 strike price. But we're doing rather well, man. The only negative positions we have is currently Oscar and Accelera. So
I'm actually kind of surprised that the Venture Global price is 20 for the $20 call. It's almost 60 cents, because that's
looks like there's some sort of, it might just be the lack of liquidity.
Oh, okay. See, this is one of the things I don't like about Fidelity. So anyone that does options with Fidelity, this is the thing that'll blow your mind. What they do is, if you buy an option, what they do is they take the lowest bid price. And then if you sell an option, right, when you look at your portfolio, it only shows what the latest ask is. So if you have a very wide bid and ask, and you look at it like at 5 o'clock in the afternoon, it's going to look completely garbage, right? So let's say right now I'm just going to check out Venture Global's, because it's literally about to expire in 2 weeks. So, and Fidelity, let me just see, VG, okay, trade options. So same options right now. If I do a quote on it, right, for, what is it, July 20th? No, July 25th. So
seen the last trade is 25 cents.
Let's see. Yeah, I mean, look at the bid. The bid is 10 cents and the ask is 60 cents.
Yep.
Right? So what Fidelity does is show you the ask, and they mark to market based on that ask. But if you look at the portfolio at about 3:30 in the morning, it actually adjusts back to like what it's actually supposed to be, which is somewhere in the middle. So, just FYI for anyone that does options with Fidelity, like, it can really screw with your brain. If you look at your portfolio in the middle of the day and you're like, how the hell am I down? Like, the stock is up like, 20%, but my portfolio is showing like a sea of red. Like, how is that possible? Well, the reason why is, especially if you do something that's like leaps, like really far out of the money options, the bid and ask spread can be really, really wide, and they'll take the worst of it as a measure. And so this way it'll look that way. So that's why we're not, like, today's loss clearly is not 11,000%. It's not 11,000. No, it's 1,100% today. Right.
Yeah.
And that probably means that we are at the $11,000 mark in the portfolio. So we're leaving at a high point, right? Because that's the only options position we have. And so if that was factored into 10 cents, that's 50 cents is 2. So that means it's what, $100 more. So we're at $11,000 in total, $11,000 in portfolio value. So, yeah.
Yeah. I'm not going to lose sleep over it.
Yeah.
But yeah, we've had some good ones, man. Let me just kind of go through. So I'll start with 2025 first, because that's easiest in terms of closed out positions. So we did close out some of those high cost basis Venture Global. So we lost $300 on those. Actually, technically we took that loss. But year to date, we've taken over $800 worth of gains in the portfolio. Most notably, in terms of the highest short-term capital gains, was Next Decade. So we had bought a lot of this throughout 2024. And then we had sold, I guess, the majority of it in January, not the majority of it, but a large portion of it in January 2025 to purchase Venture Global, the first time that we had started purchasing Venture Global. And so we pocketed over $568 in total gains from that trade, which is pretty good. It was a $954 cost basis, $1,500 in total proceeds, so over 50% return throughout the entirety of the year. So we were stacking up throughout 2024, but more notably when it got into the September timeframe after the Biden dip, we bought pretty heavy for cost basis around $4, $5, and we rode that up all the way to selling at $8.46. So really good with respect to that. Celsius even was in 2025, $141 gain on that. Not the big boy. We had one last year. That's not included in this. But that was on a $276 investment. So we made 141 off of 276. So a little bit over 50%. Also very good. We did take some profits off of Oscar, $75 gain off of $470. Not huge, but a good amount. BPYPN, we took some gains off the table there. Nubank, small win. SMCI, small win. TLT, small win. HIMS, we took this is actually pretty interesting. A $210 profit, right? So not a lot, but off of a $67 cost basis. So basically a 300% return, if my math is correct-ish on that.
Yeah.
Slightly more, maybe even. So we turned $67 into $277. So pretty cool with that. Venture Global is the only loss we've taken in 2025 for $300. Going into 2024, I have to decipher which ones we actually sold after this time. I think the biggest loss that I'm seeing here is in August of 2024. We sold DPST. This is when we were starting to try to time a lot of the TLT moves and stuff like that. Yeah. So there's that. TNA, we sold for $100 loss. Snowflake, we bit the bullet July 22nd. So that just makes it right in there. That was small. It was 5% loss. Vornado was a $26, like a 3% loss. A lot of really small losses here. And then let me go to the biggest wins that we had. So the biggest win, Celsius, was we took those profits in May, so that's out of reach. TQQQ, we turned a $1,400 investment into $254 of profit. So there was that. I started buying. So some of these shares I was buying back all the way in November 2023, August 2024, and then we doubled down to try to capture a little bit. We took a little swing trade there. Tellurian, we took about a 30% profit on that. We got cashed out because of the merger.
Yeah.
Rocket Lab is in here. So the first tranches of Rocket Lab that we sold, I think I sold this actually. Back when it started to moon a little bit. I was like, I'm not selling to my personal portfolio, but we turned, and I would share my screen, guys, but there's account numbers and stuff like that. So apologies that I'm not showing everything. I don't want everyone to have my account numbers. Rocket Lab, we turned $253 into $350. So cool with that. We did some is TMF in this? Yeah, TMF, we took some profits. HIMS is out of scope here. The first time we got into HIMS. Carnival Cruise, we turned $183 into $225.
I think, to be honest, Carnival Cruise is by far my favorite investment of 2023 and 24 in my own personal return portfolio. The reason why I'm so happy about it is because that was pure due diligence. Like that was just a lot of due diligence that I think a lot of people wrote the cruise lines off, and the strategy that I use options wise did really, really well. So in my own portfolio, like I'm up about 400% on it. I mean, one of the commitments that we kind of made early on in, when we were talking about doing this portfolio on YouTube was that we wouldn't use leveraged options bets like spreads and stuff like that. And it's not so much that we can't generate a good return using it, because clearly we both utilize that, option strategies and derivatives to make some good gains. The challenge is we did not want people to follow into something that could theoretically go negative, because the amount of risk gets really turned up high. And the thing is, if you're not very well versed in options, you could theoretically like lose a good chunk of your portfolio, and it's not even your fault. It could be no one's fault, So one of the things we didn't want to do is people to look at our kind of degenerate bets, if you want to call it a degenerate bet, and follow along with those. The rest of these, I think a 60% return in 1 year on zero leverage, with the exception of maybe some TQQ and DPST and TNA, it's not bad. Not bad at all. So
I'm curious, actually. Let's go through. I mean, this has all the screenshots since the beginning of time, since we started doing a lot of the screenshots. I'm curious what we ended 2025 at. That's December 2nd. That's January 15th. I mean, yeah, we pretty much ended 2024 with about 80 odd percent. So we have dragged on, but the whole market has dragged down a little bit. So, I mean, you think 2024, you were up about in the mid 20s. Now for the last trailing 12 months, you're really only up 13, 14, I think. Let me go all the way down. Yeah, 13, 14%. So we're still beating the market handsomely in that respect. So I can't complain.
Does it show like, what is it called? Like all-time total return?
This is an old account for me. So it has stuff all the way from like 2018, 2019.
Gotcha. Makes sense.
So unfortunately, I'd have to look, but I could probably in the background look at what the returns are.
Yeah.
But yeah.
That's fine. No, it's good. Like you said,
I think we only started this in what? Late 2023. So
did it? Has it really been that long?
Yeah, believe it or not.
Interesting. Okay.
I think we started podcasting definitely 2023, and then we went. I mean, you think about it, we did Dutch Bros as like a 4th or 5th episode, and then that was like August of. I could be getting wrong by a couple months here, and then I think that was August, because that's when I was in Tennessee with my sister and her family. And then I went to Vegas with you guys in 2023.
Mm-hmm. Just to clarify, Julie said something like covered calls are pretty safe. If I can do them, anyone can. Just put some caveats and an asterisk behind that, because there are a lot of people that thought, hey, covered calls are a great way to raise, returns, but you have to know what strikes you're going to use, what kind of expiration dates you're going to have. Otherwise, you're going to get stuck underwater, right? So I have a friend right now. I actually just spoke to him today. And they know who they are. They have 55 covered calls on Palantir that they sold at like 40. Before it ran up. So they were trying to just say, well, I'll get a little bit of money here and a little bit of money there. And what ended up happening is they missed out on that huge gain run, right? And that's the thing. And so now they're like, should I just eat the loss and basically buy back my covered calls because I don't want to sell my stock? And it really puts you in some difficult positions. Steve has a similar incident with him as well. So I think the thing is, a covered
even me, I still have Palantir stuff at 100.
Yeah,
I'm rolling. Yeah.
So. And have you been rolling those?
Yeah. And I've been eating some profit, or not profit. Any covered call income I generate, I've been using to kind of buy back. But yeah, I mean, I'm behind on that. I mean, luckily I've gotten myself somewhat out of a hole, but yeah, I mean, in certain instances, you can lose a lot of money. And there's other people that I've
It's
talked to.
it's I'm sorry to interrupt. It's not
Yeah.
technically loss. You didn't lose money. You lost potential return, right?
Yeah.
That's the biggest thing. So
Yeah. I mean, it all depends, right? I mean, if you wanted to let him go, you could, right? And you could lose upside, whatever you want. But
yeah.
you have to be careful. I think a lot of times people can get what I call premium drunk, just like they can
Mhm.
get, yield crazy, or what's the word I'm looking for? Yield trapped into certain opportunities. So to me, you have to think about why you're investing in these in the first place. Actually, the reason why somebody called me a shill and a actual horrible person and a phony, I don't know what other words they used yesterday. It was actually pretty funny. And they're like, you need to apologize to all your viewers. So this is me calling myself out, is because I sold $45 covered calls expiring this Friday on Rocket Lab. And they said, how could you tell your investors, and how could you be interviewing with executives from Rocket Lab saying that you're long Rocket Lab, but meanwhile you're selling $45 covered calls? And I'm like, I mean, when I see you have a couple hundred contracts rather, and you have the opportunity to make a couple pennies per contract, which ends up being a couple dollars, that adds up.
Did you just freeze?
Am I there?
The internet bill, Matty Matt. Oh, there you go. You're back.
Okay. So yeah, I mean, that's why somebody called me a phony, is because I sold.
If only people knew your level of conviction with Rocket Lab and the amount of shares that you have, they wouldn't talk so much.
I was looking earlier, man. I mean, some of the Palantir shares are approaching 2,000%.
Shit.
Which I kind of like, now I don't want to like toot my own horn, but I did put up my year-to-date performance. Sorry, is this my year-to-date? Let me just double check. Oh, that's my one-day performance. Nobody gives a shit about one day.
What's interesting is, with your portfolio returns, technically speaking, if let's say you had 0 returns for the next 10 years, you would still beat the market.
Well, I guess let's see.
Yeah.
So here's my year-to-date in my 2 largest accounts. Let me just double check. I don't think they're showing anything proprietary. If they are, let me know so I can.
Okay.
But so one on the left is my Roth. So that's 1 year return, 221%. And then the one on the right is my large individual brokerage account. It's 114%. So pretty awesome. And then overall today, I mean, I don't know if we're up, down, sideways, but we're about flat, down 0.5% in the overall portfolio. But yeah, man. I'm
not going to give away my total thing, but for my, let's say, like my Robinhood portfolio, which I started in like 2022, I'm up about 160%. I don't know if it's seeable, but it's about 160% there.
There you go.
I want to show the entire thing. There you go. There you go. Boom. So,
don't show the second comma, Yeah.
Listen, when you start hitting that second comma, it's like, whoa, where the hell where did that come from? No, my Robinhood portfolio like is mostly for options. Like by far, I don't care if Robinhood is picking off pennies from my what is it called? My order flow, because Robinhood by far has the best options platform in terms of like the easiest to execute trades. Yeah. Like literally you just go in there, execute, blah, blah, blah. And especially if you're like far out leaps and stuff like that, a few points of slippage is not going to like kill me. I'd rather have execution and liquidity as the main driver. Fidelity, when you try to put in like an options order, it's somewhat easy, but it's it's a little nerve-wracking. And then they actually charge like processing fees and all the other stuff, whereas Robinhood is just there you go, done. So Fidelity does give you better pricing though. I'll be honest. Like if you look at your total pricing that you get, it does save you money, but they also charge you to save you money. I know it sounds weird, but whereas
No, they're still
Robinhood,
charging commissions, like
yeah,
it's kind
yeah,
of crazy in this commission free world. My Robinhood's not nearly as good. I just have 70 grand. This is where I do
yeah.
like I just started this Robinhood portfolio more recently. It's only
Hmm.
51% year to date, but it's where I buy like my excess Bitcoin, some Rocket
Yeah.
Lab, just my continuous buys. And if I just because they've been giving out like these tickets and stuff, like, oh, you can win a Bitcoin, whatever. It's like,
Hmm.
oh, I got $2,500 in the checking account I can throw over there, and I've just like been throwing some money over there. So it's been fun to kind of restart a portfolio from scratch. Um,
Yeah.
so yeah, only
Mel
51%. Sorry, that's
Mel
that's not year to
asked,
date. That's the
yeah,
last 12 months. Sorry.
nice. Mel asked a good question. Chris, could you talk about call debit spreads? If your price goes above the sold calls, does that mean you're in max profit? No, it does not mean you're in max profit because there's still time value left on both contracts. So until time value goes to zero, you're not going to see max profit. So, imagine right now you have a call debit spread between $5 and $10, and the price of the stock goes to $12. Well, the price between the spread is only $5, but if you look on the, on there, your short call has appreciated, your long call has appreciated way more, but the only time where you're going to get max profit is literally like the day of expiration, right? So whether it's $100, or $10, you're basically going to get the max return. So that's going to be on the last day. So there is a risk of getting assigned if the company is paying, let's say, $1 in dividend, right? And the stock is trading at $10, and basically whoever has control of those shares that you sold short, they can exercise them to capture that $1 dividend, which would put you, basically, you would have to sell it to them at $10. But by that point, the market is already like dictating, that premium anyway. So I have rarely ever seen options exercised on leaps very early. It What do you mean? I don't think it's ever happened because they would lose so much money doing that. I mean, imagine right now you buy a contract, like a $5 contract on a company, and you still have like 6 months left on time premium, and you're like, screw this, let me exercise. And you exercise it, and now all of a sudden you're basically giving away all that time premium. And I could just go into the open market, buy the shares in the open market, and deliver them to you. Right. And so it wouldn't make sense to do that. Yeah. Unless there's like a giant dividend or a special dividend or something that's coming around, then there's a chance that that can happen. Yeah, Chris, it can happen if price blows away way above the short strike. Even if it goes way above the short strike, you still have to remember there's going to be premium that you have from time value, right? So let's say you have a $10 call that you sold 1 year out and the stock goes to $100. Like imagine right now all the people that have sold Palantir covered calls, right? They've sold them at 40, 50, 60. Do I think that anyone is going to be like, you know what, Palantir's at 130. Let me just exercise this call right now and lose a year's worth of premium? They're not going to do that. That's time premium. That's free money, basically. And let's say they do that. Like, let's say right now they say, oh, you know what? I'm going to exercise my contract. I could just go into the open market, buy the shares, sell them to you, and pocket the time difference and make a profit on the time difference. Right. So I could, like I said, if let's say I have to deliver Palantir shares to you for $50, right? And I sold covered calls, I could just literally go into the open market, buy those shares, sell them to you, right? And I get cash for those at $40. So yes, technically I would absorb the loss, right? Quote unquote, but I'm already absorbing it anyway. Now, here's the thing, at the same time, I could exercise the calls that I bought and get those. And basically now I get the price, the difference of the two, right? So most people, what they're going to do is it would, that long call that you sold, you're basically relieved of that obligation to deliver shares if you do that. Now, the thing is, there's there's a time premium element that's in there that gets completely wiped away. So early assignment risk is there. I'm not saying that's not a possibility, but it's rare that someone would give up time premium unless it's like maybe 30 days. Like if it's like 30 days, I've seen people exercise. Even like 90 days, people have exercised early, especially if there's going to be like a dividend or something that they want to collect and they need the shares for record of date purposes, then yeah, they could theoretically do that. But if you have really something far out, then it's not really worth it's not likely to get it what is that thing called, assigned, or they're not going to exercise it.
Mm-hmm.
Yeah.
Somebody asked a really good question. What were the first few things that we bought in the portfolio?
What did we buy?
The first thing that I'm seeing is Dutch Bros. We did have some Rocket Lab in November 2023. So the portfolio started November 2023 for everybody that's kind of following, because that's when we actually started actually making money from the channel. And then I did see something in 2023 that we did close out. That's December. DPST was one of the first things. Nintendo. Walt Disney was a couple days after the portfolio started. And then TLT. So it's like TOT, TQQQ, Dutch Bros, Rocket Lab, a few other things in there.
Okay.
So, yeah.
Yes, sir.
Cool. All right, man. Well, it's been fun. And I want to give people a shout out. I mean, maybe this is something that we should share, shouldn't share, but the channel viewership and the participation from you guys over the past few weeks has just been absolutely phenomenal. And, I don't like to make, a big stink about viewership and things of the like, but at the end of the day, we are here because of you guys. And without you guys, it really doesn't work out in our favor. But so just want to zoom in really quick and kind of show you guys how you guys have shown up and what I track to make sure that what we're doing is the right thing. So I track every episode in terms of performance, who's shown up, what the peak was, what the average was for people showing up. And then I also keep track of the trailing 5 episode sort of series. And so I've tracked this every day for the past 18 months or not 18 months, but 18 months of episodes. And as you can see, we've done over 125 episodes at this point, and we've really started to break to the point where we're averaging kind of over 250 for the past, say, 20 or so episodes. And it's been a lot of fun. And you can see we took a break here, probably about 80 episodes or so. So we've done about 40, 45, 50 episodes since the last time we took a large hiatus of more than a couple months. And so this is probably this first peak here is probably when we had a mid on or something, and people go crazy for that little Indian guy. So we need to have him on more often. But it's been a lot of fun, having you guys on and really starting to see the numbers grow. I mean, peaking out over 300 people on a live stream is next worldly for most podcasters. Most people will never see that. And the fact that Chris and I are able to do it is just a testament to you guys showing the need for what we're presenting and hopefully gaining some sort of insight. And for me, I didn't know if I was going to share this earlier, but I actually started bawling up and crying earlier because somebody messaged me and they told me that they're actually quitting their job. And I've received like multiple of that. I get a couple a month of people being like, what, you guys have done a phenomenal job. You made, and even if it's 5%, 10%, I'm not expecting to make everybody, all their money, but the fact that I'm hearing people being able to shave a month, 2 months, years, decade, or even, more off of their, trajectories to what they want to do, to spend more time with their family, to buy a house. Somebody said that they paid for their wedding, with some of the earnings that they've gotten. Like, even if I'm just a small portion of that, that's why initially I did the documentation on my channel, my Matt Money channel, starting in like 2016, 2017, just because if I ever had family or something like that and I passed away, I wanted them to see or at least document, what I was potentially doing, so they didn't like just squander my money, because I didn't have any kids and I didn't have the ability to teach it, and nobody wanted to listen to me when I talked about finance. So I started making videos on YouTube, and eventually people started watching, and it's developed, 7, 8 years later into this. And at the end of the day, it's cool to be able to see the messages that you've gotten, Chris, you've shared with me. And so it's very emotional and exciting for me to be able to provide that. I didn't think I was going to share because I wasn't sure if I was going to tear up, and I'm probably tearing up a little bit now. And, you can kind of hear it in my voice.
Don't cry, man. It's all good.
Hey, man, I needed it today. Today was, you told me you were done. No, you told me you wanted to quit the pot. No, I'm just kidding.
Yeah.
But no, it was just an emotional day for me. I'm in my feels today. So it hit me right at the right time. So
yeah, for me, I think so my wife, she's got, like about 200K in student loans. They're going to be due. I mean, they're not ever due really, because you can just keep paying them. But, they're making some changes to PSLF. And the thing is, like, my wife, she's been working for the last 10 years. And I mean, she took on this debt way before she met me. I personally would never really take on a lot of debt, especially educational stuff, but she did. And so it's always been like, okay, do we just pay this off, or does she keep working to get this PSLF thing done, so that this way, that's just one more burden that's off of our brain. And the thing is, like, now with the Trump administration, they're making some changes around it. They're like, okay, well, we're no longer going to honor what, the system was. And so because of that, we might actually have to pay. But the good thing is, because she was investing excess income into the market, she was able to generate a much, much larger return. So even if, let's say, tomorrow the PSLF doesn't go through, it's just going to get paid off in cash, done, like out of the way, And I know some people in the morning chat, they were like, yo, you took out those student loans, you should pay them. It's like, yeah, it's a government program that was created when my wife didn't even know that what she was going to end up being and how she would save and everything else. And that's the thing, like, when it's funny because people will justify like, oh, Trump is only playing within the rules because he's, that's what your job is. Your job is to find every rule that's out there that benefits you on a personal level when it comes to finances, and then apply that logic to your own taxes and your own financial goals and everything else. And if anyone wants to say, oh, you know what, this is unfair, like I paid my student loans, blah, blah, yeah, tell that to me, because I'm in like the 35% tax bracket zone every year. You think I cry about it? Look, man, like I don't want to make any more money because I'll have to pay more in taxes.
Oh, man, I see people out there that say that.
It's one of those things. So, everyone's got to figure out ways to, maximize their benefits. Like if you have depreciating assets and you run a business, then is it fair to like say, oh, you know what, I can depreciate my assets, but a regular person can't? A regular person can't depreciate a lot of expenses that a business can. So does that mean that, people cry about it? No, you have to actively look for everything out there that's going to maximize your tax benefits, and also from all the programs that are created. And all the programs are created based on laws, right? And so it's nothing unlawful, So yeah, that's where it is. And I think some of the changes when it comes to student loan forgiveness that the Trump administration is pushing is actually good things. I'm not saying every one of them is bad. Like some of them are centered around physicians not being able to use their residency as like years that count towards PSLF, because what happens is those 4 years are counted towards PSLF, but they don't make a lot of money. But at the same time, if you're, let's say, a family practitioner, your pay is about $200,000 a year, which sounds like a lot. But when you think about 4 years of undergrad, 4 years of med school, and then residency, and then all the stuff. And then the entire time you're literally stacking on risk on top of risk on top of risk. You don't see a dollar until probably like your mid 30s when you're actually earning a real return, right? From your thing. So I think a lot of people, they'll look at doctors and be like, oh, they're overpaid. And I'm like, do you understand the amount of risk that people have to take in order to get to where they have to get to? And it's not as easy as people think, and the same thing with nurses, pharmacists, anyone who works in healthcare. You're always on like the knife's edge too, by the way. People forget that, you could have one thing go wrong and your entire career is over, So, I think, like I said, I think sometimes you have to look out for these programs that work to encourage certain things. Like my wife right now, she started working and she works for a hospital system that's a nonprofit. She could have been working in industry as an MSL, as a medical science liaison, and been making $200K getting flown out by GlaxoSmithKline. But she accepted a lower pay rate, right? Because she's like, oh, you know what? I want to give back to my community. And one of the rewards that I get for doing that is my loans get forgiven, right? So it's an incentive. So a lot of times, even people who work as teachers, teachers are not like, oh my God, I'm gonna basically like teach for the rest of my life, but there's no incentive for it. No, some teachers actually deserve the incentive. Like, you want smart people working in these jobs that aren't purely based on a profit motive. Because if everyone smart is only after profit and there's no one working in the other part of the government or the military or the police, and you don't give them enough reason to do that, you're going to have the dumbest people in those categories. And do you really want a society that's literally like the top of the people are working in all the for-profit industries and the dumbest people are in the non-profit and the government side of things? Like, does that make sense? Yeah.
All right. Well, last things you want to say to the 270 odd people live now, before we take a little bit of a break?
Go out there, dude. Go out there, enjoy your life. Like, investing is great, but whatever your number that you craft in your brain that is enough, it'll never be enough. The one thing that you do have to do is understand that you only have one life to live. Tomorrow can be taken away from you at any time. Your loved ones may not be around forever. We've all got a limited time on earth. And if you ask Warren Buffett right now, Warren, if you gave up all the money you had right now and you get to become 25 years old again, I guarantee Buffett would say, yes, make me a 25-year-old broke guy living on the street, because that is where he is at right now. So no matter how much money you have, time is the one thing you can't buy, so go out there while you have the time and enjoy some of it, especially if you've done well in the market. Shit, there's no shame in enjoying it. Now, I'm not saying be fiscally irresponsible and buy like, a Porsche just to be like, yeah, I only have one life to live. And now you're going to struggle to make the payments on that thing. And you got to work an extra 5 years to pay for the Porsche. So don't do that. But yeah, just enjoy your life. And I think that's one of the reasons why we're going to take a little bit of a break this summer and just recalibrate ourselves, go enjoy life a little. And we'll be back maybe in September. We'll coordinate.
We'll check in September, see how we feel. And we might do, I told Chris, I was like, if you ever want to do a live stream, let me know in the meantime. But yeah, I don't think we'll have a consistent, twice every 2 weeks. Sometimes we're pretty good, like clockwork. We'll do 2 times in a week, but now we've kind of lowered it down to once a week. And, we'll see. We'll see how it goes after 8 weeks or so. But you never know. We could want to take more time.
Heinze said something very interesting. We call physicians, dentists, optometrists, doctors, but not pharmacists. My wife is actually a PharmD, which is a doctor of pharmacy.
My wife.
And on top of it, she did a residency. Like, so she doesn't work in like the clinical, she doesn't work at like retail pharmacy. She does like work at a hospital. And trust me, like, I know the horror stories, and Heinz's a nurse, so he could tell you on doctors that almost killed patients and were saved by the pharmacist who was just being extra thorough and just checking on things like, whoa, wait a second, how much, and it's shocking the amount of times that a pharmacist will save your life. I still make fun of my wife. I'll be like, how's that counting by fives going? Because that's the rule, that's the funny joke. Pharmacists that all they really do is just count pills, and that's not it at all. Like, they need to be on their toes with every sort of drug interaction, every sort of clinical condition that a lot of physicians, because they're just so bogged down with patient care, they can overlook them and give a medication to a patient and cause all sorts of issues down the line, and it's one of those things that pharmacists, unfortunately, they don't necessarily get the credit they deserve, especially in the hospital system. So
The
big
hospital
shout out
system
to
for sure, dude.
a big shout out to my wife, who is a clinical pharmacist. Thank
My
you, honey,
wife.
for saving a bunch of lives, making sure that these doctors aren't just going around popping pills all everywhere, giving everyone antibiotics even before the labs come back. I'll tell you a story. My grandfather, he passed away because in India, they don't necessarily have the same level of rigor when it comes to certain pharmaceutical things, and so they overloaded him with a lot of antibiotics because he had like post complicated, like he had surgery, but then he got an infection after the surgery, and what they did was they just loaded him up with a bunch of antibiotics, and they kind of overdid it, and then eventually his kidneys failed, right? And that's medical malpractice. But the thing is, in India, the rigor in terms of medical care is not that high. So it's not like there was really anything you could do about it. Here in the US, like pharmacists, that's their primary job. They look at these things, they approve them, make sure that the patient is getting the right dose. And trust me when I say this, the hospitals have more things that could kill you than things that can save your life. But it's all a matter of how they give it and the timing that they give it and the doses that they give. So, and I'm sure that what do you call it? Like guys in the chat, like Zoe and Heinze, both of them are nurses. They could probably give you some horror stories that they've personally been able to, that they've probably seen in their own practices when it comes to healthcare. So yeah.
People asking about the specific stocks. As much as I'd love to get into it, we're already an hour in. I'd like to kind of keep it specific around, philosophy, life, the things that we've kind of been chatting about. We've done plenty of discussions over the past 45 episodes on season 2 about Next, Venture Global, a lot of other companies. I was actually thinking about this today. I thought Dutch Bros was supposed to get completely destroyed by Cosmic, the McDonald's franchise, but I haven't seen any of those popping up lately.
Just one thing, Vishnu's like, hey, I'm a healthcare guy from India. Rural hospitals, they're completely different. Like if you go to the cities, you're going to see a lot more care when it comes to things. But if you're in the rural setting, then it's a little bit more non-rigorous. So at least that's and this is going back 20 years. So maybe things have changed for the better. But I know 20 years ago, the rigor in India in terms of healthcare was not that high, so just say it. Yeah.
So take the opportunity. If you guys are curious, Chris and I talk a lot on X as well. Be sure to follow us. I'm not sure. I think that both of those are in the description, as they should be. Chris's Patreon's there. My Patreon's there. Don't feel obligated, but it always helps in any sort of way, shape, or form. What else was there? Really appreciate you guys as always. The last few episodes have really been our best in terms of viewership, and 3,000-4,000 people watch this after we're done streaming. So Chris and I talk about it. We love it doing it, and we hope that we just don't burn out. And that's really the part. We want to put a little bit of breathing room to make sure that we're fresh, clear minded for you guys, and we're not giving you bad information. That's the last thing we want to do. We're investors first. We talk about that often. If I was an entertainer, guys, and I was doing this strictly to make money off of YouTube, I would have quit probably 6 months into 7 years ago. I would have quit back in 2017 before I even got started. I'm here because I'm an investor first. I want to share that with the world, and I know that's why Chris is here as well. He wants to help share his thoughts, and it's not to say invest in this stock, right? We're not trying to push or put anything on anybody. We're really here to try to help people frame their minds, understand their risk tolerances, figure out where in the pocket of investing they see fit. And if it just so happens that you end up seeing something that you like and we bring something to you that you end up pouncing on, that's great. Nothing makes me happier than when somebody says, oh, that doesn't fit my kind of MO. That doesn't fit my portfolio. I'm not investing in that. Nothing makes me happier than that, seeing that, because it means you're thinking. It means you're not just blindly following us. Makes me excited. So, Mr. Patel, any last words, brother?
This is not the final episode of Cashflow Chronicles. This is just a season ender. We'll come back eventually. We'll let you guys know probably via X, Twitter. Look out for your YouTube notification. So if you have not subscribed, please subscribe. So when season 3 finally comes out, you guys will be the first ones to know. And we'll see you guys then. I mean, and by the way, we'll do all this stuff. We'll talk about Venture Global, next decade, and everything else post summer, and we'll see where things go.
Yeah, and there's a little bell notification on this side, I think. Make sure you hit that. So every time we go live, sometimes we're sporadic and intermittent in our postings. Do we do it on Tuesday? Do we do it on Thursday? Do we do it on a Wednesday? Sometimes, we try our best to do Tuesdays and Thursdays, but we don't always hit it on the mark. So if you guys really want to be informed, hit the bell notification. It'll really help get it aware, because some people are like, oh man, I missed it. I wanted to ask a question. They didn't. So Chris, you ready to see the intro? Maybe next time for season 3 we'll have a better intro.
Yeah, I want to see it. Let's see. Do you have something special or no?
Oh, it's the same one that we've seen. Just the good old Matt Money threw it together in 5 minutes.
Maybe if you guys know someone who does professional intros and all this other stuff, please let us know, because I think
Chris goes back and forth on this forever. He's like, I like it. And then he's like, we need a more professional one instead of people's butt shaking.
We got LL Cool J doing like sexual like it's in there. If you notice it.
We're having fun, man. We're having fun. I'll chat with you behind the scenes. Thank you all. Happy season 2, and we'll see you in a couple weeks. Bye.
Greed is good. The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
It's so good.
Is good. Huge upside potential, upwards of $60,000.